Hello everyone and welcome back to another episode. My name is Jordan, the Millennial Investor. If you have not seen me before, my goal is to get to $1 million by the age of 40, and my 40th birthday is listed right here. My goals are right here, listed on the right side, telling you exactly how I plan to get there. Now, I analyze a lot of companies out there and primarily focusing on high growth companies, and one of the ones that we're going to be going over today is Beyond Meat, ticker symbol BYND. Now, BYND stock has seen pretty much all-time low prices other than the 2020 pandemic and pretty much since its IPO here in early 2022. As of the most recent pricing, it closed at a trading price of $66.58. Now, this is quite low considering just a couple months ago we were in the 120s, the 130s, and even at one point we hit all-time highs back in the previous IPO price of $239 and some change. Now, this company has seen massive revenue growth during that time, but the share price has faltered. And I'm going to give exactly in this video the reasons why I believe that has happened. We're going to look at the most recent annual report. We're going to look at the previous revenue growth. We're going to look at what analysts have this company projected to do out in the next couple of years and how I think that's going to transition into the business. We're also going to divide the revenue segments into the two different categories, both restaurant and food service, and then also looking at the retail side because these two vary greatly based on this company. And we're going to compare that to other restaurant companies and how this relates to Beyond Meat. But other than that, guys, before we jump straight into it, we've had 124 people sign up with M1 Finance so far, being one number 125 to get a free $50 bill. Just click the link down below in the description, get a free $50. It's free to do so. You'd help support me in the channel, and it's literally free money, guys. It's the brokerage that I love and the one that I've used for many years, and it's one that we'll be showcasing in today's video. But M1 Finance is one that I love, so get signed up down below. And other than that, let's jump straight into Beyond Meat stock. Now, in 2021, it was pretty much a flat year for Beyond Meat. Pretty much is traded in the 125 to 150 range on average. And then ever since the peak here in about June, July of 2021, it has been a downtrend, 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 just literally fallen to the floor. Pretty much fallen 50+% in just a matter of a couple months and going back to those pretty much all-time lows around 2019, 2020 prices. Now, if you look at the revenue growth in that time, if you look back when this initially went IPO, it was around May of 2019. Now, since that time period, the company has grown revenues on a fantastic level. We have $16 million in revenue up to $32 million in revenue, right at a double up. The next year, it went from $32 million up to $87 million. That's about a 2.5x. And then you go from $87 million almost to $300 million. That is over a 3x, almost a 4x in revenue in 1 year. Now, the growth did continue in 2020 with the pandemic, but it was heavily slowed down. It went up about a third or so, went from about 300 million up to about 400 million. So the revenue is growing. It is going up over time, and we did have exponential growth for a while, as you can see from this chart, and it started to slow down, went from 300 million to 400 million, and then it's projected to finish out this year at 465 million. Now, if you take our calculators here and you type 465 divided by 400, it's going to finish out the year at about 16% revenue growth, which is in line with what we have estimated down here. Now, if you look at the revenue growth moving forward, it's projected to grow about 31% next year, about 23% the year after, right? And that's where you get this bar chart right here, what it's going to look at, producing about 600 million in 2022 and then 756 million in 2023 right here. But looking at the profitability side of things, in 2021, it was unprofitable. In 2022, it's expected to be unprofitable. In 2023, it is expected to be unprofitable. And so far, historically speaking, this is a company that has not been able to make money whatsoever. From 2017 to late 2019, they consistently lost about $10 million or so on the bottom line every single quarter. Now, they did produce some very small positive numbers right here, $4 and $1 million worth of profit. But ever since that time in the pandemic, they produced negative number after negative number. Now, this most recent one right here, negative 54 million, that is a little bit of an exception. They did have some hiccups that were one-time expenses and some very short-term headwinds, but overall, this company is producing negative numbers consistently over the last several quarters, producing, I'd say, about on average, about 20 million in negative net income every single quarter. So about every 90 days, they're losing $20 million. That's like $7 million a month on bottom line returns. Now, in terms of their revenue, in terms of their top line revenue, like I said, the revenue growth has been historically very good for this company. This company right now doesn't have a whole lot of profits, but it's one of those companies that you're really looking at the top line revenue growth. You don't care a whole lot about the profitability, but you want impressive revenue numbers. You You want this company to scale at levels that are insane. You want to see this company reach $1 billion in revenue, $10 billion in revenue, $100 billion in revenue one day, way, way out into the future. But if you look at the hyper charts here, we'll look at the retail first. Now the retail is selling at their like Beyond Burgers at like Walmart and Costco and Target. And this has done okay. I mean, for a company that's supposed to be a massive revenue growth story and put up numbers such as these, you would expect better quarter-over-quarter numbers. It has uptrended until the last quarter or two. It's kind of flattened out. It's okay. But what's really disappointing is the restaurant and food service. And this is selling products at like Subway locations or selling them the McDonald's McPlant, which is coming soon, or other retail locations such as that. Now, if you look at this did peak obviously in late 2019 before the pandemic. And while things did expected to go down, it is quite impressive looking at how bad they were really hit, because they have never since recovered. Now I wanted to relate these numbers to what this looks like for other food businesses. Now you might be saying to yourself, Jordan, it's okay. They haven't returned back in full because the economy's not open back up yet. COVID has been shutting these businesses down. So we're going to look at some of the biggest food and restaurant companies in the world and look at their quarter-over-quarter revenue from 2020 going to today. Now, the peak for this company was around $1.5 billion before the pandemic. What is this company doing today? $1.495 billion. They just hit their all-time record revenue, and this is Restaurant Brands International, and this owns things like Hardee's and Burger King and things like that. Now, if you look at Darden Restaurants, my previous employer, I actually worked at Olive Garden for about 2 years, for those of you that didn't know. They own many different brands, but their main product is selling products through Olive Garden. Olive Garden is their big winner. And at the peak, they were doing about $2.34 billion. And what are they doing today? About $2.3 billion, pretty much at their all-time high. Let's look at Yum Brands. This owns things like Taco Bell and Pizza Hut. And this was doing about $1.7 billion. And where are they at right now? $1.6 billion. So right at almost their full all-time high. Texas Roadhouse, it's definitely Katie's favorite place to eat. One of my favorite places to eat for sure. The rolls are amazing. The steaks are incredible. If you haven't ate there before, you need to go try it out. But previously, before the pandemic, their all-time high in terms of revenue was about $725 million, and today they're actually doing far above that. They're doing almost $900 million a quarter, so at all-time highs. What about McDonald's? Everybody knows and loves McDonald's. If we scroll down here and look at the revenue, the all-time high before the pandemic was right around here at about $5.5 billion. Well, what are they doing today? They're doing $6 billion plus, okay? That's over 10% growth since the pre-pandemic highs. And then last but not least, we have Dine Brands Global. This owns things like IHOP and some other big names like that. And the previous all-time high for this one was around $227 million. And today it's breaking that high at about $230 million. You get the point. Overall, when we look at these numbers, you see company after company after company after company is either doing all-time high record revenue, or they are very, very, very close to it, like within a 10% range. But what about Beyond Meat? Its restaurant and food service revenues are not even close. The peak at this number right here was $57 million in the fourth quarter of 2019, but its average was around here about $40 million. And lately, we've been seeing numbers around the 20s and 30s, and one big number at 43, so nowhere near this all-time high. So this is what is disappointing as investors, right? If you're buying this company for the massive revenue growth and looking at the chance to maybe hit that massive double-digit revenue growth, and it's not happening, that is what happens to a company like this, where investors are just worrying about the top line. When the top line goes away, it really gets hit hard. And I gotta be honest myself personally, I never expected lackluster growth from Beyond Meat such as this. This is a company that I expected to likely stay at $100 a share plus, but I guess we can see where that ended up. Now the losses, it's what's really concerning here. When you have a company that's burning through tens or even one day, maybe hundreds of millions of cash on the bottom line, that is what's really bad. If you look at the gross margins, they're producing the same numbers that they were in late 2018. So for example, fourth quarter of 2018, they had 25% gross margins. And then just the other day, they produced 21.5%. So less than what they're putting up in 2018. The 2018, 2019, and 2020 numbers were all higher in terms of the gross margin. And looking at the profit margin, it's pretty much the same story. The last time they put up a negative profit margin number as bad as this was literally having to go back to late 2017, early 2018. So while the profits have definitely definitely downturned. The revenue growth is not that great as well in a time where other restaurant brands are thriving. So overall, as a Beyond Meat investor, I think you have to ask yourself, are you investing in this company for the revenue growth? Are you investing in this company for the future profitability? But I think no matter what you're investing in this company for, I think there's a lot of questions that investors have, and I think there has not been the best answers. Ethan Brown is a great CEO, and I think he's led this company to some great economic and personal trends that I think is going in the right direction for this company, with people eating more plant-based, people eating healthier, eating less meat. And I think this is a great company for the long term, but it's not one that I'll be owning because to be honest, even if this company was trading at $50, $40 a share, it would have to be at a valuation that's so low that I would have to just get it at rock bottom prices because this growth is just flat out not there anymore. So it makes me wonder if moving into the future, if this is going to come back in a big way and get to that 20, 30, 40% revenue growth, or if it's just going to stay at a slow grower like it is now. But either way, I'll stay tuned. I'll let you guys know if I am doing anything. If you have any comments or questions down below for this company or just me in general, let me know. But other than that, guys, thank you guys for tuning in. Get signed up with M1 Finance. Get 50 free dollars for signing up down below, like I mentioned. But other than that, guys, thank you guys so much for watching, and I'll catch you guys next time.